Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Happy Friday, everybody. It's Friday, July 8th, or July 19th, excuse me. We got just one economic item here on the calendar, and that is the consumer sentiment for the month of July. So in June, we had a 98.2 on the reading. Forecast for July is at 99. However, it did rise, but not quite to the forecast level here at 98.4. So people are still feeling pretty good for the most part. This is kind of a poll of what a survey of what how consumers are feeling, and for the most part, are feeling pretty decent, but not that much greater difference from June's numbers. So let's jump ahead here to the headline news. We got the stock market is up. We have corporate earnings reports being released. Microsoft is one of the big ones today, big winners. So they seemed blew out their earnings reports, and so that's good for them. Congratulations. And then we also got comments that were by New York Fed Williams on a speech yesterday. So after his speech, the markets basically turned and kind of rallied the market. So if you recall, stocks were in negative territory and then finishing in positive territory. It also helped mortgage-backed securities, which I'll show you in a bit, but they also rallied a bit on his comments. Basically, his comments were stating that he thinks that when you're starting to get a little bit of cold before disaster happens, it's better to start cutting rates now rather than waiting later. And then because especially when you have so much stimulus in the tools in the toolbox, um, so that kind of rallied the market. That kind of increased the odds of potentially cutting rates by half a point versus the quarter point. So basically, the new rating, so it's right around 41% for a rate cut of a 50 basis point, and like 52, 54, right around there for a quarter basis point cut. So odds are up there on possibly a half a point. But the thing about Williams' statement is today they're kind of walking backwards a little bit, which is not very pleased. A lot of investors aren't pleased about it. They certainly didn't like him bringing it up, and then all of a sudden trying to talk backwards. So the comments today is being reported that he was talking in academic terms, not on future rate hikes or rate movement. So he was talking more on academic level. So people weren't very pleased about that, saying it was, he wasn't obviously communicating well, and this is really not acceptable. So the stock market is up today, however, so kind of disregarding that. But as a result, as you'll see here, the bond market pulled back a little bit because they priced in that cut. So here's the cut. We had a nice little rally. We broke above that Fibonacci level, and so we're up about here. We started the day off lower, so we're down about 11 basis points from yesterday. But today we're up, even though we're up for the day. So right now we're up about, uh, actually we're down only about 5 basis points currently. So from this point to this point. But we started the morning off about down about 11 basis points, being right here on the line here. So 5 basis points. So right now, I would say there's no change in pricing. Lenders will be about the same as what they reprice. So a lot of lenders repriced in the day for the better pricing, and they will probably maintain that. So mortgage rates should be unchanged from those levels. As you can see here, yields they were pushing up against its Fibonacci level, the floor support, but it held. And right now, we're kind of sitting at that level at the 203, 0.203 range here right now, and it potentially could get pushed down. As you can see, we had that crossover here, and that's kind of the pattern here. And we could probably start reaching that 1.93 level here in the near term. All right, so again, mortgage rates are unchanged, so that's good news. Next week we do got a lot more data coming in, especially on the housing sector here. So that could be some market movements there. On top of course, we got the corporate earnings reports coming out. Um, if you guys are looking to refinance or buy, please reach out. Go ahead and direct message me. That's the best way to reach me. If you guys want my assistance, just direct message me. That's the best way to reach me. I am a loan officer. My company serves all 50 states. We do have a couple proprietary loans, the all-in-one loan program, which is a fantastic program for those who have cash flow and want to pay off the mortgage sooner and save thousands of dollars of interest payments. To Home Funded to help people from first-time home buyers to people who went through natural disasters to divorce situations to or even want to use it as a wedding registry. It's a way to have a down payment assistance. It can also be great for college grads who want to be future homeowners and get started on the saving to become grad. So if you have any questions on those two programs, reach out to me. I'd love to be able to talk to you about those. I have a very I have a passion for those two products as well. Of course, everything here. We got the jumbos, we got the conventionals, FHA, VA, USDA, and we got our niche loans. We got our investors. We got some great investor loan programs. Uh, I would simply state that they're between your regular conventional to hard money loans, so probably most likely better terms. We don't have the balloon payments. You're not paying umpteen points to get it, so you don't have to refinance after your period is up. And you can put less money down. We got the bank statement program, which is great for self-employed borrowers who simply don't show in their tax returns to qualify. And we got foreign national loans. So, anyways, any of those you have situations where you want to look to buy a home or buy investment property or buy a property in general or look to refinance, please, again, go ahead and direct message me. You guys have a great rest of your day. Enjoy your weekend. We'll look forward to see you guys on Monday. Thanks so much for watching. Bye-bye.